Hi traders, this is Cynthia of Day Trade Forex bringing you a follow-up video for showing you the new enhancements for the Pro Currency Strength Meter template. And yesterday I made a training video to show you the new features for the Currency Strength Meter and for the Trade Button EA. And one of the things that is new in the Trade Button EA is the potential buy and the potential sell. And these are your pending limit and stop orders. If you know how to trade retracements, then using the limit orders is a really nice, easy way to get into a trade on retracements if you miss the big main entry move. And right now we're looking at my demo account. It's mid-morning, Friday morning, so I wanted to show you this in a demo account because I don't want to place any live trades in my live account at this time of the day on a Friday. And I'm looking at a pound Aussie pair in the 15-minute chart. And you can see up here on the currency strength meter that the pound is a very strong extreme red 7.6. That's a very extreme buy pressure. And the odd is a very weak yellow 3.0. So what this means is that this morning the buying pressure is very strong for the pound and the selling pressure is weak for the Aussie dollar. So people are buying the pound Aussie as a pair because you buy the strength, which is either orange or red, and you sell the weakness, which is yellow or blue. So the pound Aussie dollar has been going up. This big arrow here was the beginning of the big move up, and you can see how the RSI crossed at the 50% level. So when the RSI is green and crosses at the 50% level and the big arrow appears sometime around the time when a green hot dot has appeared and the price is broken through the support here, then that's a fine time to get an early entry. When price breaks through the resistance, which is the black line, that's considered a breakout. So this was your entry here, and then you had a little bit of a stalling of a red doji candle, a stalling of price, and then a little tiny push up again, and then an orange hot dot that tells you that it's found the top. At the same time, the RSI is very overbought and has crossed above the 80 line up to the 100% RSI line, which is very overbought. And the RSI line has turned down and has become red. So at this point, when you have the orange hot dot appear and a big sell-off candle, this is all profit taking. And this is probably where you should take your profits to if you're day trading or scalping. But price resumed on the next 15-minute candle and pushed up a little higher, and then we had another retracement. If you had been in front of your PC, it's possible that you would have wanted to place a pending order for continued buying pressure if the pound still was very strong red at that time and the Aussie was still yellow and very weak. So you would know, according to the CSM, that conditions had not really changed, even though you see some profit taking here in a 15-minute chart. So you could have placed a pending order as a buy order so that when it came down to any level that you determined, the support line here would have been a great place to have a pending buy order triggered. And then 45 minutes later or so, we had a new push to the upside followed by a retracement and another push to the upside. Now we have two doji candles. It's mid-morning Friday, so I don't know if this pair really can keep going higher on a Friday, but you just never know. But just in this case, analyzing this chart and what the price action has been from the beginning of the big major push when the RSI crossed the 50% level, And right now the RSI is very, very strong, but overbought. So I would not, in reality, in a live account, consider on a Friday morning placing a pending order. But yesterday's training video did not disclose the full process for using pending trades. For some reason, I just didn't show you the full complete process of placing a pending trade. So even in this demo account, I'm just going to show you how to place your pending trade because I didn't show you the entire way. Now we have two doji candles, and say that I thought that price might retrace back to this 38.2 Fibonacci level, which would be a very weak pullback. And a weak pullback means that it's going to be a weaker surge to the upside. If we had a pullback to the 50% level and then it started to go back up, then that would be a very strong surge to the upside. But Friday morning, if we get any kind of pullback, well, we actually did on this previous 15-minute candle where it pulled back, the tail of the doji candle pulled back to the 38.2%. So if I had started this training video, it would have been on this candle and this candle that I would have been looking for the retracement and the idea of placing a pending buy trade. So let's just pretend, since this video is a little bit late, let's just pretend we're going to place a pending buy trade, and whether it pulls back enough to get triggered doesn't really matter, but I just want to show you the process of using the button. So to place a potential buy trade, to start the process, you click potential buy, and then it places the red line, which is your potential stop loss, and it places your white line, which is the potential buy open. And if I scroll this, it'll show you the green line, which is the potential target. So the potential target, if you use your crosshairs from here to here, is 117 pips. 1177 is actually 117 pips. So on a Friday afternoon, it's possible that won't happen, and I would never do this in a live account on a Friday afternoon or Friday morning even. But for illustrative purposes, for training purposes, I'm going to do it. So right now, the price is right at where the potential buy open price is. So that's not exactly how you would place a pending trade. You would have to drag this down. I would drag it down to right above the 38.2% level, and that would be my price trigger, right at the 38.2% Fibonacci retracement level. And this is a retracement level that has to do with the Fibonacci heat map, the red overbought zone and the blue oversold zone. So in between we have Fibonacci retracement levels. So if price pulls back to 38.2% Fibonacci retracement, then this would get triggered. However, just clicking the potential buy button, that's just your trade setup. That is your setup for the limit or stop order. And once you've arranged your lines, the most important is to pull the white line back to a Fibonacci retracement level for it to get triggered, because we don't know if price is actually going to pull back that far or just keep going up at this point. But we want a better entry, and we only want a good entry on a retracement. So right now price is pretty much stalled out, which is understandable at this time of the day. So this is not a real trade, of course. This is just to show you how to use this button again. So if I want to increase my stop loss, I would just drag this red stop loss down to a previous support. And if I think that this is probably too optimistic as a target for a Friday afternoon, I could pull it back to maybe the bottom of the Fibonacci red overbought zone. And then you can measure your crosshair from here to see what your target would be. That's about 50 pips, which is probably pretty realistic still for a Friday morning. The pound Aussie moves really, really well. It's one of the better movers and one of my favorite pairs to trade. So now we have our trade set up. We have our pending order trade set up by clicking the potential buy button and rearranging the red, white, and green lines directly on our chart to be the way that we want them. Now to initiate this pending order, we have to click buy. And then you'll see that down here it's placed the buy limit order, and it has the trigger price, and it has a stop loss and take profit. And now this order is set up to be triggered if price pulls back to the 1.85914. So now that I've clicked the buy button, the lines have actually disappeared on my chart. So the red stop loss line is gone, the white open order line is gone, and my take profit line is gone, but the red stop loss shows up as a dashed red line here, and my take profit shows up as a dashed red line here. And this tells you that if I were to get this pending trade initiated, if price pulled back and actually placed the trade, my profit would be $78.20, and it would be 64 pips. Of course, you can drag that up if you want to increase your take profit target, and it increased, you can see here, and you heard the popping sound. So now my take profit is higher, and the take profit is now, let's see, 85 pips up, and my stop loss is 69 pips. So my risk to reward ratio is still just a little bit better than 2 to 1. And if you want to increase your risk to reward, you could either drag your stop loss up on your chart, and now the risk is 39 pips and the reward is 85 pips. So you can adjust your risk to reward. I like to keep it at a minimum of 1 to 2, which means the risk would be 1 and the reward would be 2, or double of what your risk is. I hope that makes sense. Risk to reward is very important. I never trade with a 1-to-1 risk to reward ratio. I trade always with a 1 to 2 at the very minimum. And if we have a strong trading day, with today actually is a very strong trading day. Look at all the reds and blues. There's a lot of extreme movements, extreme strength and extreme weakness going on for a Friday. So I could look at some of these other pairs. Now obviously this is pushing up again without any kind of a drawback down to the bottom. After these 2 doji candles, the push up maybe not be that strong at this time of the day, but I'm sure that it will hit some kind of a target here. So if you see that it's not pulling back and you still want to enter the trade, you'll have to close your pending trade here. Just click the X here and click delete, and at that point you can just simply click your buy button. Now we're actually in the trade, and we're going to hope that it pushes up. And let's see where our target is up here at 113 pips target. So for Friday, that's a little aggressive or optimistic. So I'm going to pull my target down to right about there. Now my target is 34 pips, which may or may not be realistic, hard to know. But now my risk to reward ratio is thrown off, because my reward is 34 pips, but my risk is 56 pips. So something's wrong with my ratio. So I want to reduce my risk. On a Friday, I don't really want to be too overly optimistic, although I could be wrong. But I think the safer thing to do is just reduce your risk. So drag your stop loss, this red stop loss, somewhere up here, maybe at the bottom of this doji candle, right above the 38.2%. We saw that it drew back that far, but now that it's on its way up again, it may not draw back that far. So now we have to look at our risk to reward ratio. Sorry that it's a little hard to see. The reward is 34 pips and the risk is 37 pips. So that's still, maybe we want to move our risk, our stop loss up a little higher. Now our risk is 30 pips and our reward is 34 pips. That's still at a 1-to-1 risk to reward ratio, which is not really my ideal risk to reward ratio, but on a Friday afternoon it could be the most realistic risk to reward ratio that we can set ourselves up with. I can always draw this reward line up higher to increase the risk to reward. Now it's 1-to-2. The risk is 30 pips and the reward is 61 pips. However, another thing I failed to mention in my training video yesterday is now that we actually have a trade happening in place, and whether this would have been the pending order that got triggered and the trade was placed, it doesn't matter whether it's the pending order that you're using or the market order that you're using. Now the EA is taking over the trade according to the preset file that you've chosen. So this is the pound Aussie, which moves really well. You can choose a scalping preset file for a Friday afternoon if you want to. And the default settings, like I mentioned in my trading video yesterday, the default settings for the trade button is scalping. So if we take a look at the trade management settings, the first take profit points is 200 points, which is actually 20 pips. And so if price goes up in our favor 20 pips, and remember our target is 60 pips, so 20 pips is not quite halfway to our target. But if price moves up and goes 20 pips in our favor, at that point it's going to take 50% of your trade and lock it in and book 50% of your trade as gain. So that means half of my trade to be booked would be half of 0.21, so it's approximately 10 or 11 mini lots that would be locked in as gain, and at the same time it's going to move my stop loss to break even, and it's going to lock in 10 pips. So it says 100 points, but that's 10 pips. So 10 pips are going to be locked in. That's where my new stop loss is going to be. And then it's going to trail by 5 pips. So this is a scalp setting. It's something that I never normally would use for a pound Aussie, but we're on a Friday, so I don't want to be aggressive with my preset files. I don't want to give it a day trade preset file or a swing trade preset file on a Friday morning. I just don't know that it's going to continue on a Friday, and I never leave trades open over the weekend, so I want to be in and out of this before at least 12 noon. At the very latest I want to be out of this trade. So then for every 5 pips that this moves in our favor, it's going to move the stop loss 1 more pip to lock in 1 extra pip. So for every 5 pips it moves, it's going to lock in 1 more pip. So that's how it trails. So this trade is being managed right now with the scalp settings for this market order that I placed, and you can see we're in profit. So once it moves 20 pips into profit territory, then it's going to book half of my lot size and move my stop loss to 10 pips to lock in 10 pip gain, and then it's going to trail from there. So it's kind of a tight trail, but for a Friday morning I think it's okay. So to keep this set file, just click OK, but If this were any other day of the week, you would not want to use a scalp set file, so you would want to choose a day trade or swing trade set file, but not necessarily on a retracement trade. This is a retracement trade. We can't be that aggressive or optimistic on the retracement trades. You can when, for instance, right here, this was our big entry for the major trend change. For an entry like this, I would have used the day trade 2 or a swing set, because even though it did a lot of consolidation here, if the pound was this strong at the time and the Aussie was this weak at the time, I would have set a day trade 1 or 2 or a swing trade set file. But being Friday afternoon, I'm not going to be that aggressive or optimistic, so I'm using a scalping set file. But if this was any other time, say at the beginning, hypothetically, say I got in right here with a market order at the beginning of the big move, I would want a day trade or a swing trade set file. So I'd click load and it would come up with all these. You probably have lots of set files. I do from my other trade managers. Look for the Pro CSM, and here's day trade 1, day trade 2, or here's swing 1 and swing 2. So at the beginning of the big move, I would have chosen one of the day trade set files or one of the swing set files. And that's what you should do if you get in at the beginning of the move. But we're getting in after a retracement, after a pretty big move up. So and it's a Friday morning, so I'm using the scalp set file. I could even use a quick scalp set file if I wanted to be in and out with the least amount of risk and the quickest way possible. I would use the quick scalp set file. But my trade's doing pretty good at this point, so we'll just leave it the way it is. And here's our take profit, and now it's 10 a.m. Central Standard Time. I'll let this go for another hour or two at the very latest. However, if you look at the RSI, it's very overbought. It's reaching 100% RSI level, so it's very, very overbought. It's going into the overbought territory. The Fibonacci heat map zone is red and overbought. So it's reached the bottom of the Fibonacci heat map, and RSI is very overbought, so it's possible that at this point I should switch down to a 5-minute chart to keep a better eye on it, because if it starts to pull back again, I would prefer to be out of this trade on a Friday morning. So in a 5-minute chart, it's reached the top of the Fibonacci red overbought zone. However, it can keep pushing further up, and it hasn't reached the 100% level for the RSI in this window, but the RSI is still very, very overbought. So if I see any hint of this trade slowing down, the candle turning red, or the RSI turning red and coming down, I'm going to exit this trade with the most amount of pips. And I'm only saying this because it's a Friday morning and I don't want to stay in this trade going into the afternoon. So I would prefer to watch this trade in a 5-minute chart to see if it just keeps going up, or maybe it's going to stall and start coming down. And I would rather take as much gain as I can right now. So now you see it's a red doji and coming down, so our profit is decreasing, and I'm not surprised it's at the top of the red overbought, but the RSI has not turned red yet. But by the time we wait for the RSI to turn red, we might have given back a lot of the profits. But we only have 1 minute 37 seconds left on this candle, so I'm actually going to wait to see what the next candle is going to look like. It's a red doji right now, which means the buying pressure has paused, price has stalled. I'm more concerned that it really starts to sell off and take profit, because I want to get out of this trade with some profit and not a loss. And now the candle is really fluctuating. Let's look at the currency strength meter to give us some kind of clue of what we should do. Now the pound is still red at 7.7, 7.9, that's very strong. And the Aussie is yellow at 2.9 and 3.0, that's still pretty weak. So this is probably just a little pause. If I saw the pound numerical values go down and the Aussie numerical value go up, then I would definitely get out of this trade, because that means the buying and selling pressure is changing. But actually the pound is staying very, very strong and actually strengthening a little bit. So I'm going to stay in this trade because I like what the currency strength meter is telling me. It's telling me that the buying pressure is still very strong. So in a 5-minute chart, it could keep going higher, pushing past this overbought zone. Okay, now we're in another 5-minute candle, and let's just wait to see what the 5-minute candle does. If it keeps pushing up, we're just going to let the trade ride. But if the RSI turns red and starts to come down and the candle's red, then I know that it's pushed as high as it probably can push for a Friday afternoon. Of course, there's no way to really know. So the clue is to keep your eye on the currency strength meter. Now we see that the values are starting to weaken. Well, I would say they were starting to weaken, but they're not. The pound is staying very, very strong, and the Aussie is staying very, very weak. So I'm just going to stay in this trade and let it do whatever it's going to do until I see the RSI turn red and start to come down. That means momentum is falling off. And so what we're doing is we're following the trend, but we're using momentum to be our guide. And so at this point, momentum is still extremely strong for the pound, and the Aussie is very weak. However, we just have to watch the candle and watch the RSI and watch the values for the currency strength meter. So I'm going to pause this video and we'll come back in a few minutes, maybe on the next candle, and we'll analyze this trade. And the only reason I'm getting picky about this trade is because it's Friday morning and I don't want to be in this trade any longer than I have to. I'd rather take my profits and go to the beach or something, go do something fun for Friday afternoon when the market gets very slow and traders start to take their profits. And I want to stay in this trade as long as I can, but if I see a sign of momentum slowing down, which means traders are starting to sell and take their profits, that's what I want to do too. So I'm going to pause this video and I'll come back on the next candle in 2 more minutes. Okay, now we're on the next 5-minute candle and it's still trying to push up. We had a little bit of a pullback on the previous candle when we were watching, but now the RSI has turned red and gone flat. So as long as the candle keeps pushing up, I'll stay in the trade. However, if this candle turns red, I'm out of the trade because of the RSI turning red. And you can see the pound has weakened a little bit. It's no longer 7.9 or 8.0, and the Aussie is strengthening a little bit. It's no longer 2.3 or 2.4. So we can see that the relationship is changing here, and the pound is weakening and the Aussie is strengthening. So that alone is a clear sign that traders are taking their profits. So I'm going to click out of this trade. Well, now we have a green doji candle and it's going back up. This is going to drive me crazy, and I'm sure this is what happens to all of you. And if we switch to a 15-minute time frame, we can see that it's at the bottom of the overbought zone and we have a doji candle. The RSI is still green. In a 5-minute chart, we're definitely showing signs of profit taking. So I'm going to take my profit. I would have liked to have gotten a little bit more, but that just shows you how you can analyze these trades when they're scalping trades, especially because on a Friday you just don't want to leave these trades open any longer than you need to, especially when you see the strength and the weakness changing. So the pound is weakening. That means it's probably not going to push up too much more. And I value my time more than just a couple of dollars. So I don't want to sit here and watch a trade struggle to keep pushing up. Now in the 15-minute chart, the RSI has turned red. So, and it's above the 80 and coming down now, so you can see that. So that is your clue to get out. And here's a red candle. Everybody's taking profit. Here's the pound weakening down to 7.1, and the Aussie is strengthened to 2.9. So the relationship is changing, and I am out of this trade now, and I can go to the beach, and you could go do something fun rather than sit here and suffer through the stress of what should I do, what shouldn't I do. But this shows you how to use the currency strength meter to determine the strength of a trade in the direction that you want it to go. And you can see you need to get out when the momentum changes and just grab whatever you can at that point. And I'm only saying this because it's Friday morning. Please understand that during the week, when momentum can go up and down, I would stay in the trade. I would not be scalping a pair like this during the middle of the week and getting out with just a few dollars. That's not what I recommend. But look at the pound. It's now orange down to 7.0, so it's definitely weakening. This is just an example of teaching you how to use the currency strength meter to analyze your entry and your exits, how to use the trade button for the potential buy. If I had just clicked this potential buy, it would have placed the red, white, and green lines on my chart. That's my setup, but it will not initiate the pending setup until I actually click the buy button. And you can see the buy order here. If you want to get out of this, just click the potential buy again. And if you don't want the trade to be initiated, then just click here to get out of the trade. So this close button is just for open orders. Thanks so much for watching, and I hope that this clarifies a few things for you. If you have any questions, please feel free to send me an email. And on that note, it's time to take off and go do something fun. Have a great weekend.